What's up, traders? Welcome to this special edition of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up here on the left. So, 10,000 subscribers here on YouTube, absolutely huge milestone and two big updates to come with it. First of all, we updated some branding, as you may or may not have noticed in the intro. Let us know what you think about that. And secondly, probably more important to you, are the details for the 10K sub giveaway. There's going to be three winners, right? First place prize is going to be $100 in cash, and to enter, all you've got to do is share the link to this video on either Facebook, Instagram, Twitter, or Reddit, and just tag us there so we know you're eligible. Second place prize, 1 hour, one-on-one call with myself to help you out with your trading strategy. And to enter this tier, just leave a comment down below and like the video. Third and final prize will be our technical analysis course, and anyone subscribed to the channel will be eligible to win this one. Just note that you can only win one prize, so there will be 3 independent winners. I just want to say a huge thank you while we're doing this to everyone who's been a part of the community, right? If you've commented on the videos, if you drop them a thumbs up, even if you're lurking in the background, it's been awesome to connect with like-minded traders, especially trading with each other in the Discord. That's been awesome. So really, the community would be nothing without you, and I just want to say thank you for that. Here's essentially cheers, right, to the next 10,000 subscribers. That being said, let's get into what we do best here and analyze our broad market, so SPY the Qs and IWM, our core list of companies, and then I've got 6 trade ideas to share with you towards the end of the video as we head into the upcoming week of trade. We've also got monthly bars to look at in the broad market as we head into June, and also note that the market will be closed on Monday for Memorial Day, so please just take a moment, remember those who have fought for the US, and don't let their sacrifice go unnoticed or underappreciated. Jumping right into our SPY monthly chart, keeping it pretty simple here. Obviously, we set a new higher high and a new higher low, which keeps one time framing higher in effect ever since last October. What that means essentially is the uptrend is likely to continue until we form a obvious lower high or lower low, which as we drill down through the time frames, you'll see it's probably likely that in the month of June we do set a new higher high. So the next thing we can sort of discuss on the monthly time frame is the candlestick structure. Now, some people would consider this a hanging man, which is a bearish candlestick pattern, right? But here at the Trade Brigade, if you've been watching the videos for some time, you know we take these candles at face value and we'll just call it for what it is, right? It's a dragonfly doji or a hammer candle. And basically what it's telling us is that the buyers stepped up off of these lows and were able to close prices much higher as opposed to weak with the sellers in control. So taking back, I would argue 80 to 90% of that range there has to be more bullish than bearish. Let's drill down to the weekly, see what we're working with here. What you'll notice is that 3-week sort of range we've discussed now is still in play, right? So this is what we're talking about here, this range as noted by the large red hammer candle. And if we just break it up into thirds as we've been doing now for the past couple of weeks, you'll notice that all week we just consolidated very tight range, but in the upper third of that overall range. We didn't even come close to dipping our toes below into the middle third, never mind even, attempting that lower third there. So again, this has to be more bullish than bearish. And with this week high, this double top up here on the weekly time frame, I think it looks good for a move higher. Basically what this, is telling us from a psychological perspective is that anyone who is a buyer down here, that trade's working out in their favor. Anyone who shorted here expecting this to break down lower, they're either out of the trade completely, so short-term sellers evaporated, or if they're still in the trade, they're definitely feeling some pain. And I would imagine as a longer-term, longer time horizon short, their stop loss is probably up here in blue sky territories. They're like, okay, I'll just cut it if we start to make new all-time highs, which could fuel a sort of squeeze higher, right? So from the weekly perspective, still more bullish than bearish. Let's drill down to the daily and talk about some levels to trade against this upcoming week. If we just zoom in, you'll notice a couple of key developments here on the daily time frame. First one is our range, right? We've talked about this incessantly over the past couple of weeks, and what have we done in the past week of trade? We definitely took out 418 with some acceptance. Obviously on Monday we made the break. Tuesday, we reattempted it as support, held into Wednesday, and we moved higher on Thursday and Friday. So what this is telling us is that the bulls and buyers are certainly defending that area on the chart. Another sort of edge to the bulls is that our lows here are continually getting higher while our highs are remaining constant right around this 420.75. So that being said, it's forming a bit of an ascending triangle, pressure cooker top. I would look for the move over 420.75 early on in the week to see if we can attempt that all-time high, the blue line there, which was technically set in a pre-market session. And remember, all-time highs are generally not set in the pre-market. They generally do not tend to hold as the true all-time high of any given move. So that's the bullish case. The sort of sideways case in the scenario where there is truly light volume this week is that we sort of chop around in here, right? Any sort of moves into 418 should be bought back up. That would be, sideways to bullish, something that would look like this. Intraday, what you would be looking for in that case is obviously inverted head and shoulders like that, maybe a double bottom to take out the neckline, something like this, or from a daily perspective, just hammer candles to close around 418 as support. The next most sort of sideways to bullish action would be essentially, say we do dip down below 418, we definitely want to see 416.50 hold as support and do something like this, because that was the neckline of our sort of double bottom, something like this. There's your neckline. We took it out. You would not want to see that violated. Any acceptance below 416.50 does put into place the look above and fail scenario, which, as we know, would mean the target would be the bottom end of the range, right? Coming all the way back down to fill the gap and retest 410.50 and the 50 SMA. That's obviously a really bearish outcome, and I don't foresee that happening into the upcoming week of trade. Jumping over to our QQQ monthly chart. Again, we will say that we do have a lower high this time and a lower low, but overwhelmingly the trend still has to be up here. I mean, look at this chart. Is it really bearish? You can't say it is. If you say it is, then, get your eyes checked, basically. So that being said, trend still looks bullish. In terms of the candlestick analysis, same exact thing as what we discussed on SPY. Some would call it a hanging man. I would just consider it a hammer candle where the buyers stepped up off the lows and were able to close it stronger as opposed to letting the sellers close it weak. We did see a little bit of an increase in volume compared to the prior month, which is noteworthy to me given the fact that SPY sort of tapered off and we're headed into summer trading month. So keep a close eye on volume here in the Qs. Let's drill down to the weekly. Again, I will say the monthly looks more bullish than bearish. So on the weekly, again, checking in here, no major issues. I would say that clear double bottom with a slight higher low there from the weekly perspective. I would argue that this was a hammer, right, with the body of the candle shifted towards the upper third, and we took out that high, meaning that we are technically starting one time framing higher on the weekly, and the target here would of course be the all-time high. If you drew in something like this, here's sort of the high. Your lows are certainly getting higher. Technically, that is an ascending triangle, which is a bullish pattern, but it's not as bullish as SPY, right? SPY is ready to attempt the all-time high. I would say the Qs have a little bit more work to do from the weekly perspective. Let's drill down to the daily now and talk about tradable levels into the upcoming week. And if we just zoom in, what we'll notice is we had 4 days of balance. Really, it was 3. We attempted the breakout on Friday, and it was rejected, right? So for me, it's going to be watching and seeing what happens in this overall range. Can we break out of this sort of daily bull flag that we've put in with acceptance above 334, or are we going to reject here and see a little bit of pullback before ultimately setting that new, higher low, right? So what this could potentially look like into the upcoming week of trade is holding on to this 332 sort of 50-ish mark, we'll call it, to continue to consolidate into the daily bull flag, in which case the long is on acceptance back above 334, bump in the road as we've discussed here on the fake breakout high at 336.50, and then chop as we sort of head into this area. That would have to coincide with SPY moving to those all-time highs. Now, if we break down below 332 sort of 50-ish area, we'll call it, the ideal pullback would be to the 50 SMA and a hold there. But remember, because we've chopped through it a number of times now, we have touches here, we have multiple touches trading directly through it, it has lost some of its luster, some of its shine. It's not going to be as important this go around. So ideally, the last sort of line in the sand for the upcoming week of trade is at 326.18. Why is that? Well, just like in SPY, we have our double bottom here, and that was not only the flush point, but it was also the neckline of the double bottom, which we would want to see hold as the potential new higher low. And last but not least, the beast, we have IWM Russell 2000 and our small caps, and this one has just formed a number of inside bars now from a monthly perspective. Here's obviously the high of the, third month ago, and there's the low, and from there, we've just consolidated nicely into inside bars. So that should come as no surprise. We know if we just drill down, before we move on from the monthly, has to be more bullish than bearish. This is obviously an overwhelming uptrend with consolidation at the highs. That's price acceptance. We'll drill down to the weekly now. Again, should come as no surprise given the fact that we've covered the daily so, in depth here, but we're just going sideways. Our lows are technically still getting higher, consolidating into a bit of a triangle. Let's just pop it down to our daily time frame and discuss some tradable levels into the upcoming week. As we know, the IWM we use as more of a benchmark as opposed to a vehicle to trade outright. And with the gap and go there on Thursday and Friday, the hold there, we're going to presume that IWM will be more bullish than bearish into the upcoming week of trade. The other reason that is because if you remember, we always discuss when we're at the 50% mark of any given range, it's sort of a 50-50 shot if we go higher or if we go lower. And obviously where we sit now is slightly above the 50% mark. So we're going to give an edge to the bulls for that reason as well. Upside targets will be a recapture of 227, then the resistance trend line. On a break, again, we don't know how that's going to act because we've been consolidating for so long. The first target is going to be at 230. After that, all-time highs. To the downside, if we do roll over underneath Friday's low, keep in mind we have the gap fill underneath. That's from about 224.20 down to 223.70, we'll call it. And then, we're back down into the middle of the range where I would expect some more chop and no decisive trade to be taken. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button if you haven't already and enter the giveaway by either sharing the link, leaving a comment down below, or subscribing to the channel. Jumping right into Apple to kick off our companies, it's very clear that we still have a lack of trend. With the last few candles being red continuation candles, we are expecting a move lower into the 200 SMA and support trend line, in which case we're looking for the bounce because in a sideways sort of trend, right, with no trend, you're just looking to fade the extreme. So that's the next area of support, looking for a long there. If it does happen to break, let's say we see some nasty selling early on in the short and trading week, we're just looking for a move lower to the low end of balance here, close to 122.20. After that, there is a small gap to be filled underneath, 121.15 down to 120.40. And with the short and trading week, with low volume, that's sort of the lowest anticipated target as we go into this upcoming week. To the upside, it's, the exact opposite, right? We have a bump in the road here at 126.64, but ultimately looking for the breakout above 128 the whole dollar and the 50 SMA, which is baked in there. If it goes, you have a little room to run up to about 131.20, and with the short and trading week, that'll cap off our upside targets. So Netflix, a more exaggerated version of the Qs in my opinion, with a daily bull flag forming, failed breakout on Friday, almost went to the top end of this overall, balance area that we've talked about. Should be strong resistance still at 514 the whole dollar with the 200 SMA baked in. 50 SMA is slowly coming down to coincide for a, triple super resistance there. It just looks choppy to me. I would play this one with extreme caution, essentially, and really just keep a close eye on 500, the round psychological number. If we can hold up above it, I would just expect chop potentially higher to maybe reattempt for 514 in the upcoming week. To the downside, giving up 500, you just have your targets mapped out below. Obviously, the neckline from the double bottom here at 493.85, and after that, we'll cap it off here to the downside at 478.13, which is a very critical daily flush point we've discussed in the past here on Netflix. But again, with the short and trading week, we'll cap it off there. So Tesla, it's been on a nice little move, and it did start to break its resistance trendline. So taking this one again with some caution here, we did print an inverted hammer there on Friday, so we'll have to determine if we hold 620, acceptance above that would confirm the break of the resistance trendline in my opinion, in which case taking out Friday's high puts into play the 50 SMA. I mean, look at this red candle here. Absolutely no structure there for anyone to really use as a logical stop loss, for shorts. So I would say we could travel through that with, relative ease. Anything after that, you're looking at 667.50 as an upside target. And, because Tesla can move, let's say there's a massive catalyst, your next major target would be way up here. I'd just argue $700 psychological. Again, with a short and trading week, probably not likely, but if there is some crazy catalyst, that's what I would be looking out for. On the rollover, I wouldn't really be looking to buck this new uptrend too aggressively, right? We're not looking to take the aggressive short. It didn't really work at the resistance trend line, so we're going to let that, sort of play out. Some sideways acceptance here would be fine. If it does roll over, maybe you decide to take a long on the pullback off of the 200 SMA or this sort of 600 to 595 area of support. Underneath that, there is technically a gap that remains unfilled from 571.50 down to about 566, I can't really read that, 566.71 we'll call it. So Alibaba is just consolidating in an overall range. Again, this one's been pretty tough to trade. I'm not really looking to be too active on it as it just sort of sits here sideways. Maybe potential longs over 215.36 to trade up towards the bottom end of the gap and potentially fill it from 217.63 up to about 219 the whole dollar. After that, going to run into some resistance at the trend line, right? Struck it in from here, anchor, touch sort of 1, 2, a number of different touches in there. I would expect it to kind of roll over here. Alibaba's in much stronger of a downtrend than something like your Tesla, which is starting to form a new uptrend, right? To the downside, if we break down underneath the 2-day lows, your next critical support is at 210 just about. Anything underneath, you're looking at 204.25. And if it really gets going to the downside, we have one more at 196.57. But as it sits, kind of neutral, waiting on this one. Facebook continues to look phenomenal, right? We talked about this in the past, probably a buy at the support trend line. Obviously, that was a little while ago, and we've since moved back up towards these all-time highs. We're now consolidating just below, which again is a bullish thing. After you've gone a considerable distance, some consolidation is healthy, right? So we're looking for this to consolidate. Ideally, if we just had to put sort of a low value to it, somewhere around 326.36. If that area were to hold, which is just, coincidentally here, about 50% of this range, right? That ideally would be the low end of the consolidation there. We consolidate like this, and then you take the break over the highs for the blue sky level breakout. To the downside, if it fails at that 326.36, you're looking at 321.75, and then potentially a move into the support trend line after that, in which case, again, after setting a new higher high, would probably be a pullback buy, especially with the 50 SMA combined for super support. So NVIDIA, my goodness, what a breakout it saw on Friday. We actually alerted this one in the Discord. I personally did not participate, but if you did, congratulations. What a move there. Sitting up here at all-time highs now. I mean, it's blue sky levels ahead, right? So for me, I'd love to see it consolidate sideways up here in the upper third of that candlestick range, form another daily bull flag, and do something like that. If that's not the case and it just goes, you're just going to have to kind of wait for an intraday setup, get long there, sort of set your stop, and ride it out into blue skies. To the downside, the ideal support to hold, if it gives up the, sort of upper third, would be the third or middle third, right? If we do something like this, that would be the middle third and the consolidation highs of the flag that ultimately broke out, right? So that's what I would anticipate here with the 4-to-1 split coming up. I do think that is a bullish thing for the stock. A lower price point should mean more liquidity here as more people are able to trade it in more size, and that's better for the options market, right? So there's a number of bullish catalysts out there for NVIDIA, and I would just look for continuation in this one to the upside. I would not bet against it at these all-time highs. Wouldn't really be a player short here. Microsoft has a little bit of work to do. We did break a resistance trend line that looked like this, right? So throughout the course of the week, we did confirm the break there by consolidating higher. We had a 2-day play, a 2-day balance, in place, and that did work out lower. But as it sits now, it's kind of choppy, right? So there's no clear direction, I see at least, into the upcoming week of trade. I wouldn't really be looking for a short into the 50 SMA or this critical support. If it does go lower, maybe that's a pullback buy. But again, it sort of had the chance to pull back harder to that level and bounce on Thursday and Friday, and it just didn't do it. So to me, kind of a question mark here, waiting, being patient. The potential long for me is back above 252.86 to quickly target this double top from in here, 254.25, and then the gap is in play after that, right? So anything above 256.47 puts into play the gap all the way up to 260.25. To the downside, on a failure to hold this 248.05, you're just looking at a move to the gap underneath, right? And that gap is down there between 243.87 down to 243.21. Very small gap, but this is generally that target area should we give up that major area of support. As the chart currently sits, like I said, kind of a question mark waiting for the long, at least in my opinion, over 252.85. And last but not least, to round out our companies, we have Amazon, which is completely chopping around its critical moving averages, right? We have the 50 SMA blue line, 200 SMA green line, and it has failed to resolve in either direction, right? So we tried to go higher, rejection on Thursday and Friday, now kind of sitting at that 200 SMA. As it sits, just like Microsoft, in my opinion, kind of a question mark. Not really looking to take it short into this support because it could see a nice bounce off of that area. I would really be watching for potential longs if we were to get here, to be honest with you, later on in the week when premiums are cheaper, less risk on the table. And really, it doesn't really make sense for a long on any sort of breakout back above this 3250 mark because we have 50 SMA overhead, then we have this resistance overhead. It's very choppy right now. So to me, Amazon's a wait and see, no clear setup I'm seeing at least in this name. So quick reminder to hit the thumbs up button if you have not already and enter the giveaway, right? It's free $100. Why not? So jumping into the first trade idea, it's certainly here on AMD. And what we're looking at is a breakout continuation from Friday, right? We had this tight area of consolidation and, I'd actually just call it a ascending triangle, right? We clearly had higher lows developing, something like this, and we broke out over the top of that sort of consolidation. So as the chart sits, looking for a continuation play up towards that 200 SMA, right around 84. If we look left, there's not a whole lot of market structure in that sell-off that should act as resistance. Maybe if you look left further, this area is resistance, which is coinciding with that 200 SMA, which is why it's going to be our target. Volume is picking up on the breakout, which of course is a good thing. What we want to see happen is a long above Friday's high, right? As long as we consolidate in this sort of pullback wick range, I think it's healthy, right? If we just jump down to something like a 30-minute time frame, what we'll notice is, clearly we have a bull flag forming here. So as long as the pre-market opens up somewhere in this range, the long is available over Friday's high in AMD. Let's bring it back to a daily and go on to our next trade idea here in XOM. This is actually going to be a short trade idea here in the oil and gas space. What you'll notice about the chart immediately is that we have lower highs forming, right? And equal lows forming in this area with the 50 SMA baked in, and it's also prior market structure. So I would argue that the short is pretty much here. If we just grab the other drawing tool, the short is underneath the flush point here, kind of 58, we'll call it, just to round up, right? If we can flush that, flush the 50 SMA, there's some room to move lower, I would argue, to 55 the whole dollar, this prior, general area of support from in here and here. So short trade idea underneath the 50 SMA. Again, with that super support failing, expect a bit of a nasty flush. What you would want to see, of course, is red volume pick up and increase on the break of that level. Next up, we have FCX, right? And FCX is a bullish trade idea now. What I like about this one is the fact that we had 6 days of consolidation. Then we had a gap and go on Thursday and Friday, and we held it into Friday, right? So clearly, the over-under levels are going to be over our 43 whole dollar just about to target the complete gap fill from the gap down, right? So multiple gaps in play here. So 43.60, about a 60-cent move available over that high there with no resistance, and ultimately the target should be up towards 45. And the short, although not favorable, could be taken underneath 42 the whole dollar to fill the gap underneath down to about 41.71. After that, if you're dead set on holding it, I would say that the next target would be right around 40.50. Next up, we have C. And C is going to be a very similar play, but what you'll notice is obviously the uptrend's pretty strong and intact here. We're sitting right at all-time highs, so this 2-day balance, I would favor the breakout to the upside, especially given these lower wicks. So looking for the long over 79, 79.28 if you want to be conservative over the all-time high to just trade up towards blue sky territories. Given the range that this generally travels on any given day, I would look to take profits at 80 and then 80.50 if you're looking to day trade it. That's kind of maxing out the daily range here on Citi. If it really gets going, I don't see why it couldn't make it to 82 on a strong breakout. The whole market would have to be moving higher for that. The short would potentially be under the 2-day lows underneath 78, in which case I'd really be thinking about taking profits aggressively here, anywhere into that Wednesday range, right? So as soon as it starts to show signs of weakness or slowing down to the downside, I would kind of bail, just given the fact that this trend here is, so strongly to the upside. I wouldn't want to fight that, but the short is technically available. And then MRNA, right? This play is more of a patience play. I would say that you have to wait for the consolidation before taking the break above the 188.50, 190 whole dollar if you want to just round there and use that as the figure. Ideally, 4 days of consolidation underneath would be good, and then we get the break. So it's just something to keep on your radar. I wouldn't be looking to go long this immediately on the first break of that area, given the fact that we've traveled such a distance already in MRNA. And then lastly, we'll head over to Snow, which was a prior trade idea, and now it's starting to come back into play. If you'll remember, we had this pressure cooker top, sort of area in place at 241.75. We took it out on Thursday, and then we, failed back down into the, breakout range on Friday. So what I like about this setup, even though it looks like, a look above and fail, is the fact that if we just remember, if we split this range into thirds, I would say that we're sort of holding right at the upper third. Maybe I was slightly generous there. We're right at the lower edge of the upper third. But as long as this consolidates somewhere around this area, I would be watching for the breakout over that Thursday high to potentially trade up towards. There's some room to run on this one here in snow. The next major area of resistance I'm seeing is probably closer to 274. So a potential, solid long here if we can get going over Thursday's high. That's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section or by simply leaving the video a thumbs up. Again, thank you to every single one of you who helped us get the community to 10K. It's been a really awesome experience. I look forward to, building this even further and further. And with that being said, I wish you all a green trading week. Hope to see you in the Discord on Tuesday.